Is card show arbitrage gambling or investing? Have you ever wondered if buying and selling sports cards at card shows is a smart investment strategy or just a game of chance? Let's break down the concept of card show arbitrage and see where it fits in the world of sports collectibles. Card show arbitrage is all about purchasing sports cards at lower prices from card shows or similar events and then selling them at higher prices. This often happens through online marketplaces or directly to collectors who appreciate the cards more. Essentially, it is a method of buying low and selling high within the sports collectibles market. When we look at card show arbitrage through the lens of sports collectibles, it generally leans more towards investing rather than gambling. In this context, investing means acquiring assets, like sports cards, that have the potential to increase in value over time or can be sold for a profit based on market demand. Arbitrage takes advantage of price differences between various markets or venues, aiming to capture predictable profits by buying undervalued cards and selling them where prices are higher. However, investing in sports cards does come with risks. The market can be volatile, collector interest can fluctuate, and the value of cards is often subjective. Unlike traditional investments such as stocks or bonds, sports cards do not generate income. Their worth relies entirely on what buyers are willing to pay. This uncertainty can sometimes make it feel like gambling, especially if purchases are made without proper research or based on the hope of quick profits. There are key differences between gambling and investing in card show arbitrage. First, investing requires research and market knowledge. You need to understand market trends, card grading, player performance, and what collectors are looking for. Gambling, on the other hand, often relies on luck without informed decision-making. Next, risk management plays a significant role. Investors usually manage risk by diversifying their purchases, setting budgets, and avoiding overexposure. In contrast, gambling often involves risking money without such controls in place. Finally, the expectation of profit is different. Arbitrage aims for consistent profit by exploiting price inefficiencies, while gambling outcomes are uncertain and can often lead to losses. In practical terms, successful card show arbitrage hinges on a few factors. You need to identify undervalued cards at shows or local markets. Understanding grading differences and how they impact card prices is essential. Tracking online market prices helps you know where and when to sell. Additionally, being aware of market cycles and trends in sports collectibles can greatly enhance your chances of success. In essence, card show arbitrage aligns more closely with investing in sports collectibles. It involves strategic buying and selling based on market knowledge and price differences. However, due to the speculative nature of the collectible market and its price volatility, risks exist that can resemble gambling if approached without discipline or research. Treating sports cards as alternative investment assets requires careful evaluation rather than relying on luck.